Despite this pump, 30% from bottom to top, Bitcoin is certainly not out of the woods yet. This could prove to be the beginning of something big, but it's still got a far way to go before that. And more importantly, this pump may be due to Russians purchasing Bitcoin. These things are precisely what we'll discuss in today's episode, but before getting into that, not financial advice, etc, etc, etc. And if this episode further clarifies the technical and fundamental ongoings in Bitcoin, then please return the favor by smashing the like and subscribe buttons. Now, one only needs to zoom out to see that this move so far is rather insignificant from the big scope of things. Yet it happened at decent trading volumes, but there might just be a reason for that, something that I've discussed at length on AUGERE, both in my regular updates as well as in my bi-weekly Bitcoin videos, video updates that are released every Tuesday and Friday evening. If you want to join in on this continuous and never-ceasing case building, then please sign up with the link in the description below. Theories have it that this recent Bitcoin pump is due to a good portion of Russian middle and upper class people front-running the sanctions by buying Bitcoin. And from a practical point of view, this sure does make sense, for imagine what you'd done yourself had you walked in their shoes. For if your money is no longer safe at the bank, you'll find somewhere else to store it. And what better option than rather invisible cryptos? No one can steal it or rob it from you unless they know you're in possession of it, and most importantly, no government or foreign forces can confiscate them, presuming you assess some basic level of discretion and security. Naturally, this alone poses a great threat to the political fundamentals of Bitcoin, for if Bitcoin is seen as a respite from sanctions, a get-out-of-jail card if you may, then there's an emerging risk that big governments, the EU and the like will deem Bitcoin not only illegal but punishable by prison, as the world is on the verge of a seriously inflated and toxic situation. By such account, Bitcoin could very well, and to be fair rightfully so, be deemed as an escape route for the enemy, thus threatening world peace. And this could further increase the risk of sanctions against Bitcoin liberal countries should they refuse to make Bitcoin illegal. Hence, the traditional argument that there'll always be Bitcoin safe haven countries may be overturned in a single blow. To those of you who follow this channel for some time now, you already know I've long been talking about Bitcoin eventually dropping by 95 to 98% amidst the upcoming secular crash. I have a ready-made trilogy manuscript since a few weeks back that is waiting to be produced, that in turn justifies precisely this, both on a technical and fundamental level. And mind you, it might even get worse than 98%. Politically, this would have an equal or even greater effect than sanctions, as sanctions temporarily freeze the funds until further notice, whereas if Bitcoin were to lose near all of its value, the money would be literally vanished into thin air, thus causing even more severe consequences and despair amongst the Russians. And please remember where you heard this first. Now, here's the thing, just because there may be an increased demand among Russian citizens, still a vast minority thereof mind you, the world is still in a state of painful uncertainty, and if there's one thing the markets don't like, it's precisely that. Much of the stock market and cryptos have already priced in the current situation in Ukraine and its worst case scenarios. Anything else would surely cause a significant surge in prices. The great issue now is whether Putin will continue, and more importantly, if NATO will be drawn into this too. Given that Putin has now threatened both Finland and Sweden from joining NATO, it's a situation that can easily descend into a catch-22. Either they do join NATO, upon which fuckface Hitler Putin will proclaim it to be an aggression on Russia, to which he has, quote, no other choice but to invade Sweden and or Finland for the safety of the world, end quote. Or else Sweden and Finland do not join, which in itself makes them vulnerable to a Russian attack. And once Russia were to take Sweden or Finland, they'd be perfectly stationed militarily for the rest of Europe. Hence, given the prevalent uncertainty and the fact that the latter price movements could very well be predominantly caused by increased Russian buying pressure, this combination means that Russians buy to secure their funds, whereas the remaining world seizes the chance to sell off their holdings amidst this pump based on the increasing levels of uncertainty. How then could such price action materialize on the graph? Well, one way to look at it is this. So far we are well into a possible ascending channel. It has 2 touches at support and 2 touches at resistance. This makes it so far technically unconfirmed. Yet don't be surprised if we were to follow through in one way or another, and to put it plainly, we are close to doing so. Such touch here or touch to the downside would confirm this channel. Now, there are 2 reasons why such ascending channel is important to keep on the radar. First of all, it would amount to being a big bear flag from this already 52% price decline. And given the immensity and power buildup from such a flag, it'd likely be strong enough to plunge us way into the chart abyss. Secondly, I have yet not heard of any other technician who's acknowledged this ascending channel or bear flag, depending on what time frame you look at. Now, everyone and their granny is focusing on this previous pivot top, but even more so on this horizontal resistance zone, thus utterly failing to identify the resistance and the damage it can inflict on their game plan. And this, dear viewers, is why technical analysis is often rather complicated, for if you miss out on obvious yet hidden things, you'll often find yourself at the short end of the deal, which typically is a costly one. Look at it this way: if you were to ladder in longs here, just above the previous pivotal top, where traders in general will think it's a free reign to new all-time highs, and if this ascending channel proves to be legit, then your upside will be incredibly limited, as in a few percent, whilst the downside will be immense. And from a risk to reward point of view, this is not the type of situation you want to get entangled in. In this sense, we're talking an upside of roughly 5% and an immediate downside of 20%. And yes, from a gaming theory perspective, this results in absolutely horrible odds. What further strengthens this prospect range-bound behavior, whether it ultimately settles as an ascending channel or any other formation, is its crisscrossing movements between certain overlays. Here, for example, we have the Bollinger Bands, at which the price has flip-flopped back and forth through this middle divider. And the same goes for the EMA ribbons, which, as you can see, has acted as strong and reliable support whenever Bitcoin has been trading. Last but not least, the Fear and Greed Index has fluctuated a bit too much for this to not be a range or formation of sorts. Here at the first bottoms, we saw a reading at around 10 for extreme fear. However, upon this recent mid-February local high, it had recovered to 45. Then at this last week bottom, it was again down in the 20 to 25 region, whereas now, before even having taken out a new pivotal top, it is at 51. Now, based on the sentiment, does this here look like a disbelief rally to you? For it certainly does not do so to me. On a final note, we did get a lower bullish red RSI buy signal up on Sunday's closing. This has already generated a maximum of 20% return so far, which would have already landed us at a T1 profit. And this signal has a historical return of no less than 980% according to our little robot. Yet with a win rate of just 25% and immensely weak RSI readings on the lower timeframes leading up to the signal, we have good reason for cautious. This is why I actually stepped aside and did not take part in this signal. Hence my plan is rather to be in for a statistical low risk 700% ride than to be in for the entire 900 but at a significantly higher risk. Naturally, I'm not an idiot. I understand that I cannot expect it to run 900% from here. This historical guideline is rather a sign that this signal itself is a strong signal, and that if it were to be given free rein to run, it could easily run into a few 100% at least. If Bitcoin can break above its technical cluster of resistances ahead, and especially so if it can break above this ascending channel, I will ladder right back in again. With that said, we may seem to be close to such a trigger, when it's in fact much further away than it seems. The immediate obstacles right now are the upper bearish blue line on the daily, on which we're currently trading from below as strong resistance, mind you. The SMA 100, at which we've literally today spiked with just a few dollars margin, the EMA 200 on the daily, and this horizontal resistance zone. If Bitcoin were to find resistance here, which is predominantly likely, mind you, then this ascending channel, or whatever formation it may result in, will either be a big bear flag or bearish continuation setup. That said, we are not out of the woods yet, not even near.